Hi traders, welcome back to the channel. So I want to give kudos to the YouTube community, 160 something thousand and going strong and growing every month. So I really appreciate your support and I love your comments. And very interesting though, is that the YouTube community tends to grab onto every little word that I say, which is great. But I got to tell you, it's not a big script production, just me with a couple notes and an Osmo. So sometimes I'll say things that are a little, off script or whatever, but I love it. You guys crack on, and then you have questions based on what I said. So one of the things I said about a month ago was I mentioned options, and a few people made comments, and actually I got like 3 emails, direct emails saying, "Hey, you're a futures trader, right? And stock trader. Desire to trade? You don't do options, do you?" Actually, I do. All right, so I thought I'd give you a little taste of some of the options plays that I use. And quite honestly, they're really right out of the box. I mean, I'm not an options specialist, but I've really latched on to this one strategy. And, I'm sure you heard of it. And you options specialists, just bear with me here because I'm going to kind of go old school on this particular strategy. But really, it's a real simple thing. And it just enhances my already current trading strategies. And that is the covered call strategy. Very basic, right out of the box. All right. And there's no magic with a covered call strategy. And you can Google it, YouTube it. I use basic mechanics driven from the math generated by Tasty Tree. I think they're really the best in the business, and they've really support the math that I need to make me successful, particularly in this strategy. And the cool thing is I keep my covered call strategy really, really simple. Now, you options experts or ones who've been doing it for years, just bear with me a little bit because I'm going to really just communicate a concept to the new traders and how they can apply this. And it's working really well. I started it about 3 years ago, and quite honestly, I should have done it a long time before that. So let me paint the picture of what I'm trying to construct in this particular strategy. What I'm doing is taking a core strategy that I've used for over 14 years. It's a basic trend-based strategy. Click on the link below. I'll give you the whole thing. That's the easy part, all right? And any questions on it, just send me a comment. But what I'm doing is I'm looking at my open position as an investment house, right? It's a house that I want to appreciate. It's in a good market, things like that. But while I'm waiting for it to appreciate or go up in value, I'm really asking myself, can I rent this baby out? All right. So putting tenants in the house while I'm waiting for the price to appreciate, translation hit my target, has been very beneficial. I look at it as an additional side hustle, separate from the actual strategy that I'm using, that I've been teaching the Desire to Trade community for years. That additional income is kind of boring and slow. We're basically selling call option premium, right? And basically it's like watching paint dry. But over time, it just accumulates, just like a tenant paying rent. But that rental income really accumulates over time. And these tenants, they're great. An old couple, they pay the rent on time, no plumbing problems, right? So it's low maintenance, but it's really, I look at it as an additional side hustle, an additional side income. And I noticed on YouTube when traders talk about specific option strategies, it gets a little too involved with Greeks and things like that. Let's keep it simple here. I'm going to continue with my house investment and my rental income because this is the key takeaway that I want you to think about. What I'm doing is I'm selling options premium to collect additional revenue. Again, the tenants in the house. My expectation is I still want the stock or the futures to go in the direction that I want it to go. Let's say in this case, long, right? Stock is say at 13. I want it to go to 16 and maybe a trail to 18. That's great. Buy the stock and just wait it out. Have my stop loss in place. Same thing like a normal trade. But I still want the stock to go higher based on the trend-based strategy that I have. Again, click on the link below. I'll give you all that information. But what I'm doing differently is I'm going to invite tenants into the house, pay some rental income while I'm waiting for it to go to my targets. So I'm going to sell calls against my long position. And I'm going to use the 45 days to expiration. Why? It's the optimization math based on Tasty Trade mechanics. I'm just going with that. So I'm going to collect that tenant money. And after 45 days, if it hasn't hit, I'm going to do it again. I'm going to renew the lease on the rental agreement. I'm going to continue to do that. While price is hopefully going my direction and chugging away, I'm collecting rental income at the same time. So what's the caveat here? Why is this too good to be true? Rather than put up some really options smile charts and things like that, let me just explain to you, again, using the house analogy. If the price of my stock goes down, I'm going to have a losing trade just like any other trade, and I'll walk away. However, I get to keep that rental income while it happened. So it's going to reduce either my cost basis or the overall net loss. Next, what if price goes in my favor? Fantastic. I reap the rewards of the gains of the price increase and also collect the premium from the tenants. It's fantastic. My house value is going up and I got tenants paying the rent and no plumbing problems. Fantastic. So again, what's the caveat? What could possibly go wrong? What if the price increase is higher than my strike price? Remember, I was hoping the stock would go to 16 and then maybe I'll trail to 18. Well, if it goes to 25, I don't participate in that extra moves after 16 and 18. That's sort of the gotcha with selling premium. So what I do is I really focus on selling call premium on stocks that are sort of boring and they're not going to have these huge, massive pops. So I stay away from stocks like pharmaceuticals that can get an approval and all of a sudden like triple in value. I stay away from airline stocks because, something bad can happen. And if I'm short, that could be a problem there. I really stick to boring Dow stocks that are just going to slowly churn its way to the target. At least that's my expectation. So one of the great questions I get a lot is, well, Mike, if you didn't sell that premium, you could have had that stock move from 13 to 25. You're limiting your gains. Absolutely. Absolutely. But here's why I do this. If I had the stock at 13 and my targets based on my strategy was to sell at 16 and then maybe trail to 18, those are my targets. That's where I'd be getting out. So while I'm waiting for my house to increase in value, why not put a few tenants there? So where am I going to sell my premium? At 16 and 18. Why? Because that's where I would have gotten out in the first place. I would have missed out on the big run. Now, ones where I have big expectations, like these big high-flying AI stocks and these data center stuff, that's great. I'm not selling premium on them because I'm looking for the big home run. But the ones where I know I'm going to have a set target for, I'm going to sell my premium right at those levels. That's where I was going to get out anyway. Why not collect the tenant income? So let me show you some of our results in the options call premium collected so far this year. All right. We're taping this mid-October. Very, very consistent returns. Again, the ones that exceed my call strike, it's okay. I was going to get out anyway. Now, here are some of the expenses I have to live my trading traveler lifestyle. A couple cruises, a couple trips. If you notice the difference. So what am I doing? I'm taking the call premium that I collect as a additional revenue source and funding my lifestyle. That's why I love selling options premium. It's separate from my own trading results, but it's that little kicker, thank you to the tenants, that help me pay for my lifestyle. I'm a math geek, but I love the simplicity of it. I don't have to manage it too well. And the big caveat of, well, what if your stock doubles in a day? I'll take that chance. And would it be frustrating? Yeah, it's happened to me before, but at least I can keep my call premium and it funds a really interesting lifestyle. All right. So I hope you got a little something out of this quick video today. If you want to learn more about it, there's plenty of stuff online. I use Tasty Trade for all my educational stuff when it comes to options, but there may be more coming in the future. Let me know in the comments below. Be happy to provide that for you. But the key is keeping it simple, having it as an additional layer to a strategy that's already working for you. Let those tenants pay for the lifestyle. I'm really enjoying it. It's low maintenance. It's very traveling trader lifestyle approved. And this is the 4th year I've been doing it, and I'll continue to do it for many years to come. All right. Hope you enjoyed this one. Let me know your comments. Let me know if you tried this before and if it's working for you. And you can start small. The first year I started, I think I was pulling in about $30 a month average. Really was nothing, but I really caught the bug. And now I put the tenants in my home every possible opportunity that I can. 4 years growing, I'll probably be doing this strategy for the rest of my life. Let me know if you have any thoughts. Let me know your comments. Let me know if you do the covered call strategy. I love to hear your insights, trials, and tribulations. I know it's frustrating when that price goes above your strike. It's like, oh, I could have had more gain. It's okay. It's part of trading. Gimmes and gotchas. All right. Let me know if you have any questions. Again, I hope you enjoyed this one, and I'll see you in the next video.